Okay, good morning, everybody. Thank you so much for joining us. September 29th, Friday, a big day in the markets. We have a very special guest today, Mr. Joseph Caruso of Trader Society. Joe, thank you so much for joining me. How are you today?
I'm doing well. Thank you for having me on. It's definitely a pleasure to be here.
Awesome. Our pleasure to have you. Joe, for those of us who don't know you or unfamiliar with you in Trader Society, share with me a little bit about your history.
Okay. Yeah, for my history, I got into trading right around 2020. Right when the pandemic happened was when I got into investing. Started off with stocks, I got into options a little bit, got into crypto. It was a time period where almost anything that you bought, it was going up. So it was
Sure,
almost
I
a
remember.
very easy period. Yeah, it was a very attractive period to trade. And it really caught my attention because at that time I had one child, and I think my wife was pregnant with her second. Now we have three kids. So in that sort, with everything going on, having a family, it really catapulted me into some type of work that I could do from home that would be able to provide a good living. So I had gotten into it mostly on YouTube, social media, a little bit of all over the place. For about my first year, I want to say I took little bits and pieces from multiple people. I was trying to get my feet wet. I
Just on
was
your own though. You
trading.
didn't you didn't have a mentor at this point. You were just on YouTube, going through, watching videos, making notes.
Correct, correct. And worst of all, I was trading with live money from the start.
Sure, sure.
So I was learning lessons the hard way. I would like to say
Right,
my first
absolutely
year I probably
expensive.
did a lot of stuff wrong. Yeah,
Hmm.
the expensive way. Well, in hindsight now you see it's a lot better to invest the money to learn early on because you're most likely going to just lose money that you try to trade, especially in the first 6 months to a year. So I was pretty familiar with a lot of the popular Instagram traders, followed them. That was how I had learned about the FX Summit of
Hmm.
2022. So that was where I had the intention of getting real serious and finding somebody because it's hard online. Uh, it's easy for people to be misleading, dishonest.
Sure, sure.
It's
It's always
especially
better to
in this
go in
industry.
person. You shake somebody's hand, you meet them, see their character.
Exactly, and you can kind of get the feel, like the vibe off of somebody, which you can't really get when you see just their videos on YouTube.
Had had you reached out to anybody over online? To try to make introductions or get a mentor, or you decided I'm not even going to go that route. I'm going to go right to somebody in person.
I pretty much decided right in person. Decided to go to FX Summit. I knew a lot of the guys that were going to be there, people that I had followed, and I said, you know what, I'm going to talk to them. I'm going to learn, see what they have to say at the event. Be able to talk to them so freely when I first went there. I thought it would be more of like a presentation, which there was, but FX Summit was like the first half of the day was pretty much the speeches, the presentation in an auditorium-like setting, and the second half was where the traders had their own booths where they represented their company, and you could just walk right up, take a picture, or talk to them. So it
Nice.
was really a really cool atmosphere, and that was 100% my desire, my intention when I went there was I need to get serious. I need to find somebody who's really doing this and has a strategy that I can learn because the bits and pieces on YouTube, it was very hard
So
to get
at
a
this
really
point, give
solid
give
grasp.
me a kind of paint me a picture of your success level. And had you had some winning trades, had some losing trades. Overall, you were up, down.
Overall, I was definitely losing money straight into the prop field from the get-go. So I did live
Okay.
trade my own money a little bit in the very beginning, but as soon as I heard about prop firms, I was going with them. So I was constantly losing, failing challenges. I want to say several of them a month. Up until I got to FX Summit, I don't think I had gotten any payouts. I had passed a phase one here and there, gotten to a phase two. I had never gotten funded yet, and probably had failed about 15 or so challenges. So not, I would say I hadn't really made anything from trading forex.
Got it. But
Even with the
you knew
stocks and
that there was
crypto,
some
I
light at
had
the end of
quick
the tunnel.
success.
Okay.
Yes, that's from all the investigations I was doing on YouTube. I knew that it was definitely possible, and then I was starting to read books about it, listen to podcasts. So I would say I was a struggling trader. Not quite. I wouldn't
Okay.
even consider myself a break-even trader. I was definitely overall just losing because my
So
trading was
now
so inconsistent.
Right, right. And now that you're in education, I mean, you see that's the story of a lot of traders, right? So you weren't alone in that. Trading's a hard game. So you kind of took it upon yourself. You took the initiative. You went to the summit, and what happened from there?
From there, that was where I met who would become my mentor, which was Derek Vandelinder. He was one of the only guys who was there that I had no idea who he was. I knew all the other, almost everybody else that was there. He was the one guy I had no clue who he was. Never had even heard about him. So I had talked to him when I was there on, I want to say, FX Summit is a 3-day event. So from the first day I talked to him, he had let me know that he had a free course on YouTube that basically the way he trades, he put it out there for free. That he had a strategy that had, he was 90, at the time, I think he had a MyFX book that was showing a 95% win rate with over 12 months of data on it.
Wow.
So he wasn't, it was different from some of these other guys that claim something or that just post an MT5 screenshot versus somebody that was able to be verified by a third party, like MyFX book.
Sure.
And then
Right,
also say, hey, if you want to learn how I do it, it's all on YouTube. And then, message me if what I get. From that day, I knew that this, not just from how good it sounded, but I want to say, like, I went home and immediately started watching the first couple of videos and was in contact with him and also pulled up some charts relatively fast to see if this stuff really worked. Because, of course, you hear someone say something, they show something good. Is it actually replicable? Can I do what this person is doing?
Right.
And I realized pretty quick that it was.
You had some trading experience already, right? So you went to his strategy. Was it something that, hey, listen, this is I kind of understand what it is. I could take what I've already learned and utilize it, or was it something you had to learn from the ground up, brand new?
I was very familiar with structure. If anything, market structure was what I mostly knew. Price action, market structure, lower highs, higher lows, identifying when support becomes resistance, some trend lines. That was all I was doing. And I was doing that only for US 30 on like the 1 and 5 minutes. And the strategy that Derek was trading is more of a 4-hour daily, weekly strategy with several different indicators. So the style of trading was completely different. Where I was just taking these small trades in and out, I had zero ability to hold a trade for more than a couple hours. So I was selling that. Each day was probably a series of 20 or 30 trades that I would take. With US constantly 20 points this way, 30 points.
That chews an account up pretty quick.
Yes, it definitely does. But it's good to talk. I like to show that growth of how 2 years ago, or even what I was doing. I was trying to scalp US 30 because I saw some guys on Instagram that had success. That's what they traded. So that was how I got into that. And at that time, I didn't realize that there's a saying. People say like choose a trading style that fits your personality, and I think that could easily be used as almost a cop. Because who's going to sit there and say, I want to take 3 days for my stop loss to get hit or 3 days for a take profit if I can do it in a couple minutes? So I felt I took that as almost the cop out of, I don't need to work on my patience. I don't need to work on my discipline. I could stay impatient, undisciplined, and just trade a lower time frame. Not realizing that markets move, really, I would say, based on those higher time frames. That's the overall direction. So when you're on such a small scale, it's like you're trading a trend inside of a trend as you're going down those time frames. Exactly. One's bullish, one's bearish. Yeah, and it's so easy for the smaller time frame to get completely crushed. And the explanation is always, well, the higher time frame was telling a completely different story. Right. So I ended up learning that.
Understand that.
Yes. So that's why that is something I disagree with when people say to choose a trading style that fits your personality. I think you have to change yourself to fit with the market. If you're noticing that, hey, 4-hour and daily, I'm really good at which way market is generally going, areas that are going to react, but I try to do it on a 1 minute and I'm wrong most of the time, then it makes sense to say, okay, maybe I should pay more attention to higher time frames, work on patience, work on discipline, because that in itself
what you just described is journaling, right? So I'm sure that's become a big part of your life, particularly as becoming a successful trader. All the traders I've talked to, hundreds and hundreds. I mean, that's kind of the linchpin that sets the winners apart from the losers. Is that when they switched over, focused on the off the chart stuff like journaling and consciousness, mindfulness. I'm sure that's I know we'll get into that. I don't want to jump too far ahead, but I just wanted to see what your thoughts were on that.
Yes, I do think a lot of what you do off the charts plays a role, because to get consistent results, you have to trade consistently. Anything else, I feel as humans, we are very designed to go with habit. You know, whatever our habits are, that's even subconsciously, it happens so quick that you tend to just do whatever your habits are. Just like in the morning, you generally follow the same routine, and if there's something completely off, it's like you have to intentionally to accustom that. So when you're trading, if
Right.
you're so used to doing something wrong and you learn a better way of doing it, it's like you have to build that habit where the first couple months of shifting, whether it's shifting time frames, shifting to a different pair, uh, incorporating indicators, anything that's throwing you off, those first couple months I feel are very rough. Just like with any habit, like you never go to the gym. The first day you go to the gym, you're really sore, you don't want to go, and then you
Of
try to
course.
build that habit of, now I got to make that hour out of each day to go to the gym. And I feel trading is like that too, where it takes a little while to kill the old habits off. So no matter how good a new strategy is, because most strategies will work, if you have to kill the bad habits of the inconsistency, the impatience, the over trading, the over leveraging, the anger, the revenge. Yeah, the revenge comes in. So no matter what, you learn a new strategy, you can't really ever say, okay, in a month or two, you're going to be insanely profitable, because it's not really realistic. Most people will adjust their habits. And as soon as you start doing better it's like a day by day thing, just like with anything,
Yeah,
with
yeah,
the whole
absolutely.
just for today
Absolutely.
mindset, it all starts with today, not the I'm going to revenge trade today, but tomorrow I'll stop. Tomorrow I'll just,
Right.
let's say, yeah, and then
Right.
it gets pushed off and pushed off. It really is like you had said, mindfulness is a really
Yeah,
important
definitely.
factor.
Journaling, reflection, and so what were some of the tools or skills you used to kind of break those bad habits? I mean, it's easy enough to go get a mentor. He gives you a new strategy, but like you said, you had been in 15 auditions that didn't go well. How'd you pivot from that? Because a lot of traders need to hear that story.
It was a slow and steady growth. Like, it would be, of course, everyone would like to hear the I blew 15, 20 challenges audition, and then or learned a great strategy and I never failed one ever again, or everything was just
Right,
perfect from
right.
there, never. But that's not, yeah, that's really not how it is. It was a slow and steady growth where instead of blowing challenges in a week or two, I was starting to last a full month. I was starting to get those,
Cool.
challenges at that time. There were they had time
Sure.
restraints, where
Right.
now they're kind
Right.
of off. So I would start to get those retries where I'd go the end of the month slightly in profit, get to do a retry, or slowly to more phase twos and then lose on phase two. But my period of consistency was slowly growing, where instead of trading great for 3 days and blowing it all on the fourth day, it started to be trading great for 3 weeks, then having that day that really sets me back. And then it would grow to more. Now I'm passing phase two. Then I was starting to pass and get funded. Then I was blowing accounts right before my pay. Every time I would get one payout, blow the account. Get one. That's so it was definitely, I want to say, from the moment that I had met Derek and learned that new strategy, it took me about 8 months to get consistent. Where those first couple
That's a
months was
great
that
story,
damage.
because a lot of
Hmm.
guys expect 15 below out auditions, and then they're going to just turn it around on a dime and be profitable forever. But you're right, it's small wins. So trade a little bit longer on this one, trade a little bit longer on the next one, pass the next phase. So that's a something that I think needs to be highlighted more for traders. Like, those are all higher highs. You're trending in the right direction.
Hmm. Exactly. Yeah, there's not always a crazy breakout where you just shoot right up. It does
Right,
tend to
right,
be exactly
exactly.
like you have those pullbacks. You'll always have those
Right.
pullbacks, but how you deal with the pullback becomes different as the months go on. As you're also I feel general experience in the market will also kind of slowly bring you
Sure.
up, but
Hmm.
back testing will also kind of rocket your growth, because I felt that I did a ton of back testing in the first 3 to 6 months, where with swing trading, I think it's 100. I mean, any strategy, but specifically swing trading, because you see such few trades actually play out in live
Right,
time.
right.
Might be 2 trades a week, one trade, maybe three.
Sure.
But you could sit for an hour at night, backtest, and see how 20 trades play out. So you're in 1 hour
Exactly.
of backtesting seeing more play out than perhaps a whole week or even close to a month in terms of trades. So I think
Right.
that
Backtesting's
really
so
got my
crucial to get your
experience up there.
repetitions. Yeah, getting your repetitions, particularly when you're swing trading. You might have one or two good setups a week, like you said. You backtest, you could do 20 in an hour. So great point. So journaling, backtesting, understanding that the ride isn't straight up. Higher highs are higher highs. Taking those small wins. What else? What else was crucial to kind of getting over that hill for you?
One big thing for me was learning how to cope with the anger. I don't know how, I'm sure other people could relate, but when you find yourself taking trades that you shouldn't take, over trading, over leveraging, you have a couple trades that go sour and you fully become aware of what you're doing, but it's almost like you can't stop. You feel as though you're losing control. You're clicking the button, not wanting to click, knowing, hey, I shouldn't keep chasing this. I shouldn't keep increasing the risk, but my account keeps going lower and lower, so I gotta take a bigger. And then the rage that would come out of it. I mean, at least for me, it was almost like an anger that I was so mad that I was aware of the mistake and then
Mad at
still
yourself.
doing it.
How could I be doing this
Yes,
to myself?
yes,
Right.
yes.
There's
While I'm
angers
watching
that
the account
are
just go lower and lower.
Of course, of course. We know we'll shift to kind of prop trading as we get a little further on in the conversation, but a big part of the appeal of prop trading for a lot of people is that you have a max risk, right? So, yes, your account's going to go lower. You could lose that account, but it's not like trading $100,000 of your own money and flattening that. So you have guardrails. So, what were your thoughts on prop trading? With that kind of behavior as opposed to trading your own account.
Now I've noticed there's a big difference. Prop trading is much, much harder in terms of there's not a lot of room for, especially
Sure.
because when you look at it in terms of, like you said, your max risk is how big the account really is. Because you can't ever go under that. So that's basically what you have. And for most prop firms, it's like a 8 or 10%, which basically means in order to hit a 10% target, you're really having to make about 100% of what your drawdown actually is. So you actually have to make more than what it seems you have to make. So your risk, I guess what I'm getting is your risk has to be higher than on a account that's all of your own money, right? Because you have that target to
Relative
hit.
risk.
So that's kind of what creates.
Right.
Yes. Yes, that's kind of what creates the no room for error. Is you're trying to hit that target, and your account is only so big. So it almost creates this, and people try to rush it. I think the whole aspect around trying to hit a certain percent is what creates that emotional turmoil. And then with your own money, you can so easily buy yourself out of a bad position. You can, because you have all that wiggle room, you can hold trades a lot longer because you're typically not going to be risking 10% of your 20% of your whole account. If you're risking a couple, you have a lot of options. You have a lot of options in terms of if something goes quite a bit against you, you can then take a larger position, and when that comes up, you can very easily then break even on it, or get out of your early one, keep your later one. I mean, I essentially do that in trading but it's way easier when you have access to 100% of an account, and your first trade is only a couple percent risk. It's
Joe,
a lot easier to deal with those losses.
That cuts both ways. I mean, you start revenge trading and amplifying your size to kind of get out of a hole. I mean, that's a good way to flatten an account, though.
Yeah, it certainly can. It all depends, I want to say, on what your original trade, because that's where that emotion stems from too. Is like that first trade, if that goes sour, are you taking the same size risk? Are you leaving the trade alone? I guess, yeah, you could say it is definitely a double-edged sword, because if you are using high risk on a live account on live funds, it does become very similar to a prop situation.
Yeah,
but
or more so. I mean, in $100,000 prop account, right? We charge $700 for it. I mean, you can't. The max you could be out is $700. If you had $100,000 account of your own money, I mean, I've heard many guys blow $100,000 on one trade. So it's having that, you don't really have that backstop. Where what I've found is, coming from traditional finance where there was no prop to the prop space, it really helps people, one, develop good risk management strategies, and two, it has that hard backstop where people just build a comfort level. That's only $700. I could buy another one, Whereas getting out of a hole of 100,000 potentially, that could be impossible.
That's a lot of auditions you can get. for $100,000.
Yeah, absolutely, absolutely.
That was the
So,
mindset I used when I would just buy it after I'd fail. I'd buy another one right away. It was exactly that. It was the mindset of, okay, well, I only lost $500 or 800. I wasn't in, if I had a couple thousand I was willing to spend at that time, it would be, hey, I have essentially 5 accounts that I can trade versus if I just put that couple thousand in, took one bad trade, didn't put a stop loss overnight, something silly, and then it's all, you could lose it way quicker. Like you said, that was the best thing that I liked about prop firms was while I was learning to trade, why would I want to put, even if I had, 5 or 10, why would I want to put that 5 or 10,000 into an account if I wasn't really good at trading and there was a high chance I was going to damage that?
Right, exactly.
Or like you said, you get the backstop.
Absolutely.
Worst case,
right,
lose what you put into it. And then even if you traded that account for a month, whether you got funded or not, but the experience that you built from having to follow risk management. That's why I say it's harder on a but it's harder in a good way because while it may take you longer to make money because, you'll do great for a month, maybe pass your audition, get funded, blow it. You'll have things like you get so close to passing and then lose it. That situation can happen where a live account you may have been able to withdraw as you please, but it creates such discipline when you're trading with prop firms that now I look at when trading live funds, it's almost like a breeze. But if you do it the other way around, it's a hard transition from trading your live to it's completely different. You go prop first, use your payout money from prop firms to put into a live account or to get more funding with other companies. I think that's the best thing is basically use your profit money to reinvest so it's not coming out of your pocket per se.
Right.
And prop firms are great. You trade with prop firms and you're funded, you get a couple payouts. You're probably a much better trader than people that are with. Because I know people that only trade live funds, and it's a lot of them. They'll make money and they blow it. Yeah,
right, they're using too much leverage. They're using too much size. They're not using good risk management. Where the prop firm gives you this structure where, you either you follow it or you don't trade. So it does create good habits, like you said. Let's jump back over to what you said, like when you were trading and you had that anger build up. What did you do to get over that hump, or is it something you still struggling with? Do you have any tips for
way
people who
less
might be experiencing that?
Yeah. It's way better than it used to be. And like I said, I think experience in the market, but also you become calloused as you've traded for more and more time. Whether you do put back testing, and as the years go on, I would say callous to the market in a sense of you start to see what the market is really capable of. Where in the beginning, you might say, US 30 or an index moved a couple hundred points, and you're like, wow, that's huge. There's no way it's going any farther. I'm gonna chalk up my loss, whatever. I'm taking another trade because that was such a big move. The mindset's like that. Like reasons I would get into trades early on in my trading career was I felt like almost like a newbie to the market where I didn't know what it was really capable, and I lost accounts like just huge moves happening, big candles, and just constantly trying to let her in. Like there's no way it's going farther. But as you get seasoned.
Yeah.
Yes, as you get seasoned and calloused and you've taken some of those you kind of build from your loss, kind of goes into your library of experience where you're like, hey, okay, I've seen CPI happen, I've seen NFP, I've been in losing trades. Maybe it's better this time. I don't care how big the move is. If it doesn't line up perfectly at the spot I want, I'm not going to take it. So I felt taking trades I wasn't supposed to was a cause of a lot of where that anger would come from. But now that I started to get that experience, when I shouldn't be in trades, understanding confluences, multiple time frames, I find myself in less bad trades or just those impatient, undisciplined trades where you can't wait. That would be one reason where I would find myself getting trades I wasn't supposed to. Then the losses pile up. I notice nowadays how important it is to just take a break, whether it's 30 seconds, sometimes it's a matter of 10, 30 seconds, a minute of how much of, because in that exact moment that stop loss gets hit or that you're over leveraged, then you manually close it and you just feel like that new rush of, when you take a loss and it just like that feeling that comes over, instantly want to try to get it back. Reacting on that is where a lot of damage has been caused for not just me, but for a lot of people. But if you were to take even a 30-second break and put the phone down, close out MetaTrader, and take it sounds silly, but literally just to take a couple breaths,
absolutely,
let it a little bit, and then I'm sure this is like an anger management tactic that, you know, some people say count to 10. It's crazy how just that small amount of time, and on the chart you're not missing much. Usually the thing just keeps on going anyway, and you might have even saved yourself from another loss. But that you need the common sense to come back, because I feel the emotion, not just in trading but in life, when you get very emotional, it's kind of common sense. Whether you're deeply in love, whether you're really angry, really sad, you act in a way that you wouldn't normally act. And so realizing and how that ties into trading is that's your career. You know, you basically have to work on that aspect if you're trying to be a trader, and that's what you do. There's certain mental aspects you have to work on. So dealing with the emotions, and it's not like you ignore. It's hard to just say, oh, now I just don't feel It's not that I'm emotionless. It's just the way I cope with it is much better than I used to, because I could see felt the damage that can be done by just letting the emotions take over as opposed to that common sense.
Right. Sure. It sounds like you have a very good level of self-awareness when you're trading to kind of know these things, know the problems you have. How much of these items are written out or kind of like hard lines in your trading plan and process driven, as opposed to, I just know when to back away?
It's funny because I've been considering writing a book. I have been considering writing a book and kind of including a lot of it, whether trading plan related, life experience, kind of combining it all into have it fully written. It's more of the trading aspect stuff that I have written down. The confluences, the time frames, things to look at, trading checklists. I have more of that written down than psychological stuff. But I do intend to have it all written out and kind of, whether it's almost like a manual or like a mini book, because like you're saying, it is good to have that written down.
Yeah, absolutely. Yeah. Then, I when I trade, I love to have a if this, then what, for everything. And like you said, on the emotional side, that's where it gets so hard. So, that's a great rule. Hey, listen, if I have a losing trade, I'm gonna step back for X amount of seconds or X amount of minutes. Or, I know a lot of guys will say they'll take 2 trades a day and that's it. So if they're both losers, they're done for the day. Or if they have 1 winner, they're done for the day. So those kind of rules seems to help people have balance.
Yes, like I like to do it in terms of draw, meaning that because I do layer into trades, so on one position I will usually take a couple, and it's great. This strategy does have a really high win rate. So knowing that, I want to say about 50% of my losses, the trade actually does play out. So one tactic I incorporated was taking an entry after my almost stop loss of the first trade is, if the higher time are valid. Because if you're at like a daily, weekly level, it gets hit. You may enter too early based on a 1 hour, 4 hour, get stopped out, but everything is still there. Essentially what you're getting stopped out on. Yes, like you could be getting stopped out on a wick, on a daily wick or a weekly wick.
Right.
So in order to prevent that, I realized that over time that there's a big difference between when you're trading based off emotion and when you're trading based off of reason, logic, and your trading plan. Because I realized, like I was saying, about half of my losses, the trade played out after it hit it might have gone another 10, 20 pips, but usually such a close margin that I realized if I gave that trade another opportunity, on a good 50%, maybe even a little more of my losses, then it would be completely recovered. And ultimately it plays out.
You're in at a better entry price now too.
So the risk there as well. So now you're not just going, you're easily recovering your loss and still making back.
Do you have a rule for that? Let's say you get stopped out. Do you, like, I don't know, I want to get into your trading plan a little, not plan, but your strategy a little bit. But say you're working with I don't know how big your stop loss is. So you're working with a 10-point stop loss. What you say you go back in when your stop is hit, what are you setting your next entry at?
It would all depend on the confluences that were there. So if there's a moving average, a trend line structure, it is all going to depend on it's lined up, because it's never static. Like I don't use a static stop loss of it all depends on all of the confluences that are present. But as we know, at some times, instead of having a huge stop loss, you try to have that one entry that has a reasonable stop loss. Like I always try to go for at least a 1 to 2. normally a 1 to
Right.
3, but ultimately my trading plan, I mean I could when we go on charts I'll show you, but I usually am taking 2 positions on every trade. And the second entry, so the intention is 0.5%, 0.5%. One is going to be about halfway through the stop loss of the other. So that trade will be double the lot size, but still the same in terms of risk percentage. So if entry number 1 and entry number 2 get, I'll actually make more than 1 to 2 than what I have drawn up, because now I have that bigger trade with a better risk to reward. So it's bigger in lot size and risk to reward is better. But if both of those lose and I take that full, we'll use 1% as an example, those 2 trades lose and I take that third one, that'll be at the stop loss. Sometimes I'll let it play out. If there's, again, the confluence is even further, I'll watch it and let it move even more and then take that trade. So now the take profit's going to be exactly the same, because the general area was highlighted for a reason. So that recovery trade doesn't have to be huge. It can still be about another 0, the same risk as the other ones. But now if that trade plays out, you're going to make, I want to say, closer to like 1 to 4.
Right.
Because it went
because
even
you
farther
entered it
instead
so
of
much
that 1
lower.
to 2.
Right. Exactly.
Yes. So with the way I trade it, I do have to be careful about how good the trade is that you're taking, because the last thing you want to do is layer into like a losing trade. So I am very particular about what I enter and when I enter.
Got it. So when you're assessing a setup, that kind of strategy is only going to be used on A++, I would imagine.
Exactly. Yep. Not really anything less than the best of the best, especially if the account is funded or if it's the first trade on an audition. Funded and first trade on an audition in my head is I won't take anything but the best of the best. Because then on your audition, once you that trade is a win, and now you're up, 3R, whatever really your risk was. If it was 0.5%,
right, now you've got some cushion in there.
1.5. Exactly. Then okay, if you want to, I don't ever in my book I only take what I consider like an A or a B setup. When it gets towards C, or like where there's not much time frame correlation, or when it's very against the trend, I just don't even take those anymore, which comes from the being callous to the market.
Right.
And seeing some of those continuations
you know what happens with those.
Go.
Yeah.
Exactly. Where it's just not the risk, not worth the risk. Exactly.
Right. Now, do you have a specific, you mentioned a checklist earlier. Do you have a specific protocol you utilize to assess those trades? Or is it, because some traders trade discretionary, they have a feeling, it's an A+ feeling trade, or it's very systematic, they have a specific things they're looking for?
Yeah, like with the grading between, I only use like A, B, and C. And for an A or A+, it has to have multiple time frame correlation, meaning either the daily or the weekly has to be lining up with the 4-hour, because I'm not anything less than 4-hour. It has to be 4-hour daily, weekly. If something is picture perfect on the 4-hour, has all of the confluences on all of the indicators, but it's against the trend and looks ugly on the daily and the weekly, to me that's like a C. Where that one time, the 4-hour looks perfect, but if it's against the daily or weekly, the odds of it playing out are much smaller, and a lot of those trades just end up being break even. They don't hit the full take profit. It's just that minor pullback that you're catching when it's against the trend. Where a B, I would say you have daily 4-hour lining up, but against the trend. So sometimes that is at a lower low, where it's at a lower low, but your daily is divergence. Your 4 hours divergence. You have a moving average. You have a trend line. You're getting daily and 4-hour, weekly 4-hour. You're getting these multiple time frame confluences, but you're at a lower low or a higher high, trying to catch it. So it's the odds are there, but you're still against the trend. So any sell at a higher high or a buy at a lower low to be an A+. The A+ trades are those higher lows or lower highs going with the trend, going with the momentum of weekly or daily setups.
So it sounds like you're typically going to be a trend continuation trader. Do you do any reversals?
That's what, like when I say a B setup would be those trend reversals, but there has to be daily or weekly confluence with the 4-hour.
Got it.
That is really the only scenario I'm entering a counter trend, or like I said, selling at a higher high, buying at a lower low, buying support. Where you might catch is when on some of those higher time frames and trend lines structure, then I will take those trades. But there's even a way where I don't always catch the very bottom, But if I can see that the weekly or the daily is coming off of a confluence where the whole trend could, I'll look on the 4-hour for the initial move to happen. The first pullback, if it comes to, again, another, probably better if I chart, but there's some structure
sure,
of 50 moving, a break retest of the 50 moving average is a very common trade that I look to take. Okay, so you want me to share the screen then?
Yeah, absolutely. Go ahead. And then as you're pulling that up, give me a quick rundown of your trading room. I know you're in a trading room trading live daily. What do you kind of go over in there? Is it straight live trades? Are you giving practical advice as well?
Yes, it is a bit of everything. It is, we do a Monday to Thursday, 9 to 12. So I am live 3 hours for Monday through. So about 12 hours of live trading and live education. I like to say our main focus is more on live education than it is signals. We call signals, for the group, we call trade ideas and signals. But really, the most value is given in the teaching and the live session. Some people join the group and they're in it for the signals, which is all right. But really, on our live, we're teaching you exactly.
You know? Right, exactly. What if you have to go to the doctor one day? I think the education is really so much more important than the signals.
It is. It is. And especially with a strategy like this, me and Derek both don't use a set and forget type of mentality. We are hands-on with the trade management, with taking partials, moving stop, break even. And if you're just in it for the signals, people tend to manage it a little bit differently, right? They don't take the two positions. They don't layer in. And then there's scenarios where if you only took the entry, I'll use this example because it did happen on this trade that happened this week on USD CHF. So I'm going to show you the example where the original signal that I had posted, I'm going to show you with, let me get rid of all my boxes. This green line was the original area that I had posted the trade at. Now, if you trade the way I do, I had layered into it, where my first entry was at the green line, and then I took another entry up here. 9.2, it was 200, I almost caught the very top of it. But the concept behind this is, actually, if I draw them both up, it's going to be even better. So let me show you. I closed it for less than, the risk to reward didn't look perfect on the original trade, but it was really the stacked entry that got me the best risk to reward. It was 200.
Awesome. So you were able to build some more horsepower with that stacked entry.
Yes, exactly. If you just took what was posted and you weren't on any of our live sessions, you didn't see how it was managed or additionally, where another entry was taken, you would be left with just this first one, which ultimately it played out still. Like the overall move played out, but this entry got me about a 1 to 4, even a little bit better than that, with the same exact stop loss. But as it was coming up, I hate when my mouse does that. As it was coming, entry 1 was entered. It reacted a little bit. We had that little bit of a drop. This is on a 1 hour. I want to say it dropped like 20, 30 pips. And then it came back up. At that point, I advised everyone to take 50% partials at break even. So if stop loss would get hit, you're now a half size stop loss. But the real intention is that I'm basically taking off that risk and I'm going to apply it at that better position. So closed 50% partials because we gave the trade a chance. It popped back up, took off half of the trade. Then as it came up higher, I took that second entry, which was bigger lot size because the trade has half of the stop loss. You're talking about a 55 pips versus a 25 pip. So it was literally about double the lot size. And as it dropped, you break even on the low position completely. And then you are left with just this trade, which is bigger lot size than your original trade, better risk to reward. So I can't stress how much this trade management really got me to the next level in terms of trading. Where when I wasn't, I was more of a break-even trader. I would catch good trades, but wasn't managing them properly. Not really seeing how you put stop loss to break even too early. Sometimes it'll tag your break even and then play out, which did happen on our first entry. If you only had the first entry and if you moved your stop loss to break even a little bit too early, it came right back, hit it, and then played out. So there's instances where if you put your stop loss to break even too early, you smother the trade. If you don't stack your entries, you also can't put your stop loss to break even, because then you have, like for this trade, the first trade is a great example where you don't want to put stop loss to break even because you didn't catch the very top of the move. The best thing you could do if you have an entry that's not perfect, I would say, is trail it close to the very edge of the move. That's really the best you could do, just in case that trade's going to come back there. So that's another reason where if you don't utilize trade management, you might not even be able to use a proper break even without smothering your trade and missing out. But if you're in at that better spot, that's a safe trade to put your stop loss to break even. You're pretty much at the very top. Your stop loss, I would say, like 3, maybe 5 pips, just to make sure it's outside of danger. But now, yeah, it's a great. Now, even if this was and came back all the way up to entry, we put our stop loss at around this region. I'll just put a small box. Say it was around this area. After it had come down through here, before at least night for me, had stop loss at break even, protected. But if this did rise all the way back up, your better entry, if you got that, completely. If you ended up with just that lower entry, now you're getting hit with the stop loss. Where maybe you were able to close partials, so you're not going to take a full stop loss. Maybe you're taking half of what you originally planned to lose. But it's a huge difference. Like, this is literally a game changer. It will make you more money. It will allow you to get break evens instead of losses on certain trades. And again, you only really want to be taking good trades when you're doing this, because the last thing you want to do is stack, and it all lose. And then the third scenario is, yeah, entry 1 lost, but I did reduce my risk. So like when it did play out a little bit, I'm very quick on my first position to, 1, use lower risk in general. On that first position is never going to be heavy. Even if as long as it gives a small move.
You're just trying to get a feel for what the trade's going to work out.
Yes, I'd still say I'm entering on an area of confluence. There's still some confluence. It's almost like the just in case trade, where you're still waiting, you're still being patient, still being disciplined, but usually there's layers of confluence, right? Like you'll have a trend line, then you'll have a moving average, then you might have Bollinger Bands, for example. You'll tend to have that aren't always right on top of each other. They kind of come in little waves. Like, you make sure the stop loss is outside of all of that. But for your entries, you have to decide, am I going on this confluence, this one, this one? So what I do is I enter on the early one with the smaller position. And then my second entry is based on the best possible scenario, where there's the most. And it's usually towards about halfway through the stop loss that I have that range. And then if both of those fail, it hits the stop loss.
I mean, this could be the next day, right?
Yes, it could be. That's why I really focus my trading during New York session.
Right. Yeah, understood. Do you ever use time as a parameter? Let's say it's not going your way in, X amount of hours or X amount of days. Is your thesis now void, or is time not play into your thesis?
No, time does not play into it at all. So I'll enter at any time of day. Preferably, I like the morning because I have the whole day to manage and kind of watch and see. So if it plays out a little bit, so I prefer to trade pairs that move the most during New York session. USD pairs, gold, US 30, Nasdaq. I'd much rather prefer to be in those trades than like a Euro GBP. One that I know is going to really have its move during London when I'm asleep. But I will enter during Asia. I'll enter right after rollover during Sydney session. Like, there's really no specific time restraint. If it takes too long to play out, I don't look at time. It's more about what price is doing, where the moving averages are, where the Bollinger Bands are. So it's a combination of the indicators. And if market structure is building up, say, a higher low in the process, and it comes back to an area where time might have went by, but if the indicators and price actions aren't looking good, then it's okay, maybe it'll just have to break. But I don't ever
Got it.
manually close because of anything related to time. I will
Understood.
take partials though. I will take no matter where price is at, right before high impact news. So if I'm in a trade that's only say
Okay.
40 pips in profit, not much, I will usually cut that in half. That's my
What have you
trade
found
plan.
percentage-wise? So news is tricky, right? So what have you found percentage-wise of a continuation of your thesis through that news?
That's why I don't close it before news. And I will enter right after news, whether it's 1 minute, 10 minutes after. If, again, I focus mostly on the chart where I take fundamentals into account. And I'd much rather trade with the news if I can. And sometimes news creates that perfect trade where it gives an even better entry.
Sure.
That's also why I will take partials on my trade. The only time I won't is if it's deep in profit. If we're 100 or more and it trades floating,
Right.
and
You've
it's
got a lot of room
like that, I'm not gonna. Yeah, but I'm gonna hack it down if it's only 20, 30 pips. Let's just say USDCH, 20, 30 pips in profit, high coming out, NFP, CPI, something major. Because again, my mind immediately goes towards what if news gives a better entry. So might even shoot up quite a bit, go quite against the trade. So I eliminate whatever of my risk that's floating, and then we'll see, hey, maybe we'll get a better entry during the news. Because I never get upset, right? I'm not going to get upset by playing it. Yeah.
Right, absolutely. So, a lot of people, they're in the trade, the news, it starts going the wrong way. They're thinking, I lost this trade. They're not thinking, I'm going to get a better entry. So that's a great outlook to have. Interesting.
It developed like that type of mindset. The whole mindset of capital preservation is what I would call it, is from trading prop firms. If I was never really trading prop firms, I don't know if I would protect my capital the same way I do with prop firms. But you notice with all of my stop loss to break even when there's confluence, I'll take partials at break even if it comes. There's a lot of instances where I'm trying to eliminate my risk whenever I have the opportunity to. Whether that's taking partials, stop loss to break even, close partials, because the intent is always, well, if it comes against me, I want to be able to take a better spot, better entry, a bigger trade, and not have to soak up so much, use as much risk to really tap into that. So it's always, I guess you could say, capital preservation is at the top of my mind. Is how can I cut my risk but still let the trade play out? Don't cut it too small, but you want to, especially when you're around the entry.
Profit and process over profit.
Yes.
Sounds like.
Yes. And because I know my risk to reward is always at least a 1 to 2. Like I'm not ever going to really close a 1 to 1. It's always 1 to 2, 1 to 3, 1 to 4 is what I usually get. There's times where my stack entry actually gets really good risk to reward, 4 or 5, 5, like very good. So that's when you have a high win rate and pretty good risk to reward. There are a nice little chunk of trades that are going to be break even, and you might miss out on the overall move where you're not always able to get in. You're trying to be disciplined with the entry. Maybe it just misses your entry and plays out. There's no way to catch all of them, and they don't happen too often. But when you use the probability-based thinking, and which comes, I want to say, from not just experience, but probably more from backtesting, because that's where I probably saw way more trades than I've seen live, to draw back on and say, okay, I know out of 10 trades, there's one loss, several break evens, and the other ones are going to play out. On average, maybe 1 or 2 losses max. There's really shouldn't be more than that. Then those couple break even. Sometimes break even trades they go to hit an area of partials, and that area of partials is where it acts to break even. So it could still profit a bit on break even. But it's really when those trades play out, when you catch that full reversal, that you make a 1 to 3, 1 to 4, and it makes up for that slow week where you broke even, you closed, news where you closed partials, then news pushed your trade to take profit, and you only made a 1 to 2 on your trade instead of, or even less if you cut down your risk significantly.
Joe,
you didn't make as much as you wanted.
From a risk management strategy, do you have a rule of thumb? Are you doing 1%? What is your typical Must have.
It honestly depends on if it's a live account, if it's a funded account, or if it's during like an audition or a challenge. Because I tend to be a little bit more aggressive during a challenge or an audition than I am once the trade is funded. Percentage-wise
Interesting.
on a live account, yeah, it's honestly a little bit different for each because I'm okay with being a little more aggressive in a challenge phase because once it's funded, I know that that money is real. So I'm
Right.
very particular about the trades and much more keen to take partials, right? Because it's almost like you don't want to take partials too early on a challenge because you're trying to hit that goal. You're like, well, I want to really let
Yeah.
this
You're
trade. But when the
stretching.
money is real, yeah, when the money's real, you're like, let me close partials. I could take 100 out of the trade. If it comes back to break even, hey, I still made out okay on it. I want to say on a funded account, I'm using less than 0.5% on the overall setup.
Okay.
So my entries are about 1/4%, maybe 0.20,
Awesome. Very
0.15, because I
very
will
safe.
take. Yes, that's the
Especially with
only
your high
way I've
win rate.
ever.
You know, you have a very high win rate, very high, you trade high R's. It's I love hearing people who have trading success in both of those avenues staying very close on that percentage number. Way too many people want to risk 2, 3%, and it just doesn't end well.
Yes, and I'm sure you, in the position that you've been, you've probably. I want to say because I've noticed it as a the people who are funded or even live, the people who are consistently pulling money from the markets, making money on a consistent basis, not blowing accounts, they all tend to use, I want to say 1% or less. Never,
Oh
most
yeah,
of them are
absolutely.
under. These guys getting consistent payouts, they're doing like 2% a month.
Right. Because
Maybe
capital
3,
preservation
4.
is so much more important than profit in this game.
Yes, especially prop firms. That has to be the mindset. If it's your own money, you want to be aggressive, like you could kind of do what you want if you want to risk 5% on a trade. But when you're limited, when you have those strict limitations, it has to be capital preservation over everything. Break even happens and the trade plays out, whatever. You know what I mean? You followed
Right.
your plan,
There's
you were
there's
trying
more
to preserve
setups.
your capital.
Exactly. Process, process,
Yeah.
process. Of course.
And you give the
Well,
trade
Joe,
a
man,
chance. It's not like you don't
right.
let it play out. It's when it plays out a bit and then comes back where you can kind of digest and say, hey, I gave it an opportunity. It started to consolidate. Let me cut some of that risk off, close half of it, or just take the break even.
Yeah, Joe, I would definitely encourage you to write that book, man. You've got a lot of great knowledge. You sound very well rounded for a guy who just started a couple years ago, or 4 years ago. So I really appreciate you coming on and joining me today. I'd love to have you on again soon, and learn more about your strategy and get people into your room.
Yes, especially I haven't started. I got the $1 million audition. I haven't taken the first trade yet, but perhaps in a couple weeks, couple months, whatever it is, we can do another one of these, and I can even go over some of the trades that I took on that.
Awesome. We would love to see it. We'd love to see it. Best of luck with your audition, and if you need anything, just let us know. And we really appreciate your time.
Sounds good, and bring me on again.